Good evening from Beijing. My name is Eric Bergloff. I'm the chief economist of the AIIB. And I'm very proud to present the first flagship report since I joined the bank a year ago. And of course, when you prepare a report like this, you rely a lot on your team. And I want to give a shout out to my team, and particularly to Yangping Chia, who's led this work. And when we were looking at topics to address in this year of the pandemic, it was very clear that looking at global value chains was something that was of very much of interest to us. And particularly when we started, it was the impact of the closing down of economies, particularly in China, but of course beyond that. And we wanted to understand the implications of that. So what I'm going to do now, I'm going to talk you through a presentation that looks at both the short-term impact and the medium-term impact, and then eventually also the long-term challenges that global value chains are confronting. So let me share the screen here. And so now I should do this, and I should do this. Wonderful. So here is the Asian Infrastructure Finance 2021, Sustaining Global Value Chains. So global value chains have been extremely important for the global economy, but particularly for the emerging economies, that created new development pathways for them to join the global production system. And the global value chains are also very much connected to infrastructure. Of course, coming from the Asian Infrastructure Investment Bank, we wanted to understand this link and how they mutually reinforce each other, how better infrastructure help develop global value chains, and how global value chains put pressure on infrastructure to improve. We also want to understand better what we have seen over the last decade or so, that this expansion of global value chains have slowed down and very much shifted from advanced to emerging economies. So these are some of the themes that we wanted to explore in this report. And we see a number of challenges and opportunities for global value chains. Of course, as I mentioned, the pandemic shock, both the lockdown and then now the reopening and the sort of asynchronous, not simultaneous opening of these economies have played a very important role for these global value chains. And we see it on a daily basis on the headlines of newspapers and so on, the problems of deliveries and so on. So we will come back to that. There are trade tensions that very much impact also global value chains. There are technological changes going on, the digital infrastructure and the possibilities that countries have in exploiting these changes. We want to explore that. And finally, and this is very important, what are going to be the consequences of the net zero transition for these global value chains? This is an existential issue, and it will really impact what progress we will make on the net zero transition if we can get these global value chains to really become much less intense in the use of carbon, and how we can maybe make countries compete offering green infrastructure. So looking at these pandemic shocks, there's no doubt that they persist. They started out, as we said, from these shutdowns, but now economies are opening up at a different pace, and that is creating problems for the global system. But I think the broad conclusion is that infrastructure as such has held up well through the pandemic, but the bottlenecks really has come into the open as the economy is reopened. It's probably too early to assess the impact on global value chains of all these developments. These arrangements are, we know from previous episodes of impact on the global value chains, these are very sticky. So previous shocks to them have pretty much gone away. But this time may be different because this is a much more drawn out shock to the system. There are also important long-term drivers that may affect the future of global value chains. We'll come to them in a minute. So I said that emerging economies have gained an increasingly high share of global value chain exports. And it's true for China, but it's also true for other emerging economies. And that is really the major shift if you look over the last decade or two. And that's something that we will look more closely at. And of course, a lot has happened in emerging economies joining these global value chains. But if you look at this chart showing the rate of participation, they are still lagging much behind the advanced economies. So there's a lot of room still for them to become part of these arrangements. And that is something that when we think about the future global value chains, we just need to think about also the role that they play for these economies. And that's why they are so important. So when we look at what happened to global value chains over the last decade or so, there's no one simple observation. So some countries like China has upgraded and today import less of their intermediate goods, and they have acquired the capabilities to produce them domestically. India has chosen another route, which is really about realizing higher value added through functional upgrading, looking at individual functions, introducing maybe new technology, upgrading in that fashion. So the conclusion is that it's really no one size fits all. And there's nothing inherently positive in moving upstream or moving downstream. And so grabbing more of a production earlier in the chain or moving downstream to closer to the markets. This depends on what are the capabilities and possibilities for individual countries, and that you need to. That's a process that policymakers need to go through. What is clear, though, that infrastructure has been decisive for the expansion of GVC participation. Really, it's through infrastructure that you can break up the production process, and you can exploit efficiencies depending on the quality of the infrastructure. So clearly, this is something that we need to pay tremendous attention to. There's clear that a certain level of infrastructure, probably mostly electricity and transport, they are necessary for participating at all into these global value chains. And it seems like when we look at the connectivity of these global value chains, it's particularly important for the most complex products. That's what the left or the right-hand figure is showing. So the more complex products are more dependent on the capacity of the transport and broader infrastructure. Also, we have seen in the pandemic the importance of the digital infrastructure and how having different access becomes a huge divide between those who do have it and those who don't. And it's the same when you look at the impact of the global value chain. So taken in India, the proportion of households that can access internet ranges from more than 50% in some states and less than 10% in other, like Odisha. In China, it's also very clear that those cities that have had better internet coverage have higher exporting intensity. So infrastructure is critical for the development of global value chains. So we spent one chapter on China and one chapter on India. And when we look at China, it is really fascinating to see how infrastructure has helped spread internationalization across the Chinese economy. The more inland areas exporting more intermediate goods and high-tech goods. This has been a challenge, as we know, for the Chinese economy for decades, if not for centuries, to develop the interior. This has been possible now through very large infrastructure investments. And one particular investment that has been very important for China has been the opening of the China-Europe railways, because that has helped, particularly now in the pandemic, certain cities inland, Chongqing and Chengdu, to export high-tech exports and become centers for production and exports of high-tech. And if you look at the future, China is clearly very aggressive in adopting robots, and with the increasing labor costs in China, it's become more important, and also in expanding 5G coverage that has been particularly strong in some of those places that are important for China's export. So when we look at India, India has also expanded its participation in global value chains, but what we find is that it has been focused on a few parts of India, and we have but India has not fully exploited the possibilities, and one of the issues that we see is the difference in connectivity across different ports in India, and this connectivity very much is related to export performance, or the better connectivity is, the more likely you are to export, and that's something that will very worthwhile for India to develop. We also try to develop a very simple framework for policymakers to look at this connection between, on the one hand, global value chains and infrastructure, and you could think of it in two dimensions. One is interventions that are very much related to the GVCs themselves, so they are sensitive to GVCs, and some that are maybe neutral across GVCs and other types of production. And then you have whether these interventions are tied to a particular place or whether they are sort of neutral. So at one extreme, maybe the lower right-hand corner, you have things like the institutional quality, building a better business environment, developing the soft infrastructure across the whole country, that we call GVC neutral and place neutral. In the other left-hand upper corner, you have things that are particular to attract global value chains and benefit global value chains in particular, and are tied to specific places. The most obvious examples are the special economic zones, and those have been very successfully used by some countries, and that is something that policymakers need to think about. Where do you want to focus in this space? And it gives you a sort of rich set of policy options. You can combine hard and soft infrastructure. You can look at trade policies and regional connectivity, and you can look at place-based interventions like the special economic zones that I mentioned. You can focus on institutional components, things that are really across the whole economy. Investment promotion agencies have proven to be quite effective in some countries. And of course, trying to encourage local content, if it's done in the right way, can be very effective as well. So to summarize what sort of the long-term impacts and the challenges for the global value chains, we really came to focus on the impact that the transition to net zero will have, and the need to really sustain the global value chains through this transition. We know that the whole basis for global value chains is to produce in different parts of the world, transporting goods, intermediate goods also across very large distances. And of course, this is a challenge for these arrangements now that we are trying to decarbonize the entire economies. So there are basically 5 elements that we see to this, how we can sustain global value chains in this net zero context. We have the emphasis on renewable energy production, so making sure that the power that supplies these global value chains is renewable, that we get trade and accurate pricing of renewable energy, and we get a greening of transport and logistics, because if we can't, we have to green both the production and the transport, and that is going to be the real challenge. This cannot be achieved without international governance, without creating transparency around the criteria for what is green and what is not green, how we can measure this, how we can translate this into financial instrument. But at the end of the day, this is really an opportunity for many countries to try to create what we call green comparative advantage, trying to offer opportunities for global value chains to compete for investments from these global value chains by offering renewable energy, by offering green transport opportunities and so on. So this is really, it's a challenge, but it's also an opportunity. The same thing if we look from the lead firms that are now coming under so much pressure to commit to the net zero carbon transition. These lead firms can become very important levers in trying to achieve the net zero transition across countries and also across sectors. So the elements I would say is, they can impose carbon price, even if we don't manage to get even within economies, perhaps carbon price, but even less so internationally, it will be very difficult to in the short term at least, get an agreement on carbon prices. So here there are institutions, these net lead firms of the global value chains, they are very much drivers of investments, and they can impose carbon price within their value chains, and that can really help push the net zero agenda. They can push common standards. These global value chains rely very much on harmonization of standards, and that they are the same across the whole global value chain. That pressure will be also very powerful in achieving the net zero transition. And finally, getting transparency about data in this space. Here, these firms are coming under increasing pressure from regulators, from their creditors, from their shareholders, from civil society. All these pressures to create data transparency, we think will be very helpful in pushing the net zero transition. And the other side of this is, as I mentioned, the host governments that really want to attract or maintain these investments from global value chains. They can offer decarbonization opportunities, so renewable energy, environmentally friendly and circular economy production, efficient and effective multimodal green transport systems, and finally, access to input that can preserve biodiversity. So all those things are going to matter for a firm that looks, where should I put my production, and where should I invest in transport? All those things matter for them. So to sum up, we think that the global value chains can offer a very strong climate smart development. They can offer inclusive transformation opportunities to emerging and developing economies. And we saw how much the importance of these global value chains has increased in emerging and developing economies over the last 10 years. They can also provide us with an additional tool to achieve the net zero transition. So this is where we see a lot of opportunities. And finally, and this is probably a big claim, but in the end, if we can get these global value chains to prosper, we are building a common stake in a peaceful coexistence and common prosperity in Asia and beyond. And this, I think, is the ultimate goal of trying to create the global value chains and sustain them through all these challenges that we have discussed, both in the short term and in the longer term. So this is what I wanted to say, and thank you very much for your attention. I now give the floor to Ludger Schuchnecht, who is my colleague here at the bank, the Vice President for Corporate Secretariat, he has promised and will now take over to moderate the discussion. So thank you very much.
Yes, thank you very much, Eric. It's a great pleasure for me to be here in this session and to moderate the discussion. Good evening, good afternoon, good morning. I think, Eric, with the report, I still have a physical copy. I don't know whether that's still politically correct to have that, but I think it is a very impressive document. And you mentioned the importance of global value chains throughout the pandemic, the resilience that they have shown, and the challenges ahead for the recovery to deal with the technological advances, with the geopolitical and political economy uncertainty, and the net zero requirement. And we have also, as you all know, quite some bottlenecks at the moment, some probably and hopefully only transitory, like the logistical bottlenecks we have. Some may fade as investment bottlenecks are filled. Others will be more long-term challenges. As you said, the fossil fuel, to replace the fossil fuel infrastructure and reliance on fossil fuel, and to build the physical and digitally enhanced infrastructure that we need. So the comprehensive infrastructure systems that we need to generate. And especially, of course, for the successful carbonization, so that we have more green energy, the infrastructure around green energy, and the green fuels for transports and logistics, and the international cooperation and governance around it that is necessary to make all this happen in a kind of market-based, growth-friendly manner. Finally, you've stressed the role of lead firms for better tracking, better data transparency, and I found also very intriguing for setting green standards up and down the value chains. I'd never thought about this aspect, and I think it is very intriguing. Finally, there's the question of what governments and MDBs can do, and I think it's the right time to start the discussion on the panel. And after that, we will turn to the audience. So let me quickly and briefly introduce the panelists that we have today. There's first Amitabh Kant, who is CEO of National Institution for Transforming India. And he was a key driver of the Make in India, Incredible India, and God's Own Country initiatives. And you have been also, Amitabh, you've also been chairman and CEO of the Delhi-Mumbai Industrial Corridor Development Corporation. And you've been involved with kind of getting India higher up the map and the ranks to be a business-friendly country. So we are very happy to have you here on the panel. Next is Alicia Garcia Herrero. Alicia and I have known each other for a long time. She's Senior Fellow of Bruegel and Chief Economist of Asia Pacific at Natixis. And I see that you're also a Senior Fellow at the East Asian Institute of the National University Singapore, which is a place I like very much, and a member of the Council of Advisors on Economic Affairs of the Spanish government. So that's quite a global portfolio, which I think makes you an extremely interesting panelist for us here. And finally, there is Chang-Tai Hsieh, who is Winkelried Professor of Economics at the University of Chicago. And you've done a lot of research on growth and development. And you've also been in the policy community with the Federal Reserve Bank and the World Bank and the Economic Planning Agency in Japan. So I think we all here span quite some global and topical spectrum that should lead to a good discussion on our Asia Infrastructure Finance Report of 2021. So let me jump into the questions right away. Let me start with Amitabh. How do you view the bottlenecks and dislocations following the pandemic we see today? Will we see fundamental shifts in global value chains, or will we go back to pre-crisis arrangements? How do you see the future?
So let me first thank the bank for, and especially Eric Bergloff and the chief economist for an excellent presentation. And let me say that the world is moving towards a new normal, and the pandemic has only accelerated this process. Even before the pandemic hit, new global supply chains were being forged owing to trade tensions. And as the world felt the full brunt of lockdowns and disruptions in global supply chains, the pace at which new supply chains are being forged has only accelerated. It is no secret that value chains are experiencing strains. Demand is surging, investment is lagging, and all this is contributing to the development of bottlenecks in certain global value chains. Both countries and companies are re-evaluating their trade and manufacturing strategies, and this can serve as a new avenue for growth, not merely in India, but other countries as well, looking at the competitive advantages which other countries can build up quickly. So there are indeed fundamental shifts that are underway, and a realignment of global value chain is taking place. However, countries that alone can offer a conducive environment for manufacturing and exports are likely to benefit. Seamless multimodal infrastructure, the size and scale in manufacturing, and a strong human capital pool are key determinants. Essentially, countries need to be extremely competitive uh, in terms of the cost of production and in enhancing their productivity. And realizing this opportunity, the government of India has been working on multiple fronts to position India as a manufacturing hub with strong focus on exports. There's been a conscious effort to shift policy focus from Make in India for India to export driven policy framework to drive Make in India for the world. Our logistic performance has been improving, so has ease of doing business, where we've uh, removed a number of rules, regulation, and procedures. We have launched several production-linked incentive schemes, introduced reforms in taxation, increased infrastructure investments in infrastructure, and all this, I think, will only lead to better productivity and better lower costs of logistics. However, financing and building resilient infrastructure, to my mind, is the key challenge, and the carbon footprint of global value chains and associated infrastructure is another key issue we must collectively address, because countries and companies which go digital, which go green in the context of climate change, are the one which will grow and prosper. And therefore, companies need to face this challenge of going green. Companies need to become more and more, uh, uh, you know, climate smart and digitally enabled, and that is what will enable them to penetrate markets. Thank you.
Thank you, Amitabh. Turning to Changtai, we heard from Eric that the global value chain related development model is perhaps challenged now with the changes that we are seeing. How do you see the future of the model that so many countries have used over the past decades to go forward, to become more prosperous and more integrated into the global economy?
First of all, I want to applaud the AIIB for their fabulous report. In terms of your question, I think it's useful to separate the question into two questions, which is, what are the strains and what are the challenges in the medium run, and what are the strains and the challenges in the long run? The short run challenges, which is I think a lot of what we're focused on, I think is really just a short run issue, which I think is just a combination of the big shift in demand towards goods away from services, and also from the temporary lockdowns due to COVID. I think, God willing, that is eventually going to go away. And I think that the bigger challenge is what is the prospect moving forward. And I think that there are two main challenges moving forward. The first one, which I think is probably the most important one, I think it's really political. That it seems clear to me, at least in the U.S., that the political consensus in the U.S. about that economic efficiency should trump everything, that is clearly gone. That's clearly gone. And so if I think about sort of the main challenges, it's this. So it's like it's this sense that global value chains and trade more generally are going forward going to be subordinate to political considerations. So we've seen that in the previous administration of the US, and we've also seen it like in terms of lots of actions that have been taken by the Chinese in terms of their foreign policy. That it seems clear that the goals of Chinese foreign policy is going to trump whatever whatever the benefits of economic value chains are. So I think that's the main thing, and it's not clear to me that anything that one does is going to be able to deal with the fact that these political considerations are going to matter a lot. The second one, related to your point, is I think that the other major challenge that I think going forward is related to one of the topics of your report of climate change, which is that it seems clear that we are also going to get more volatility in terms of weather, and then going forward, I think that's just going to accelerate. That's going to accelerate. So more weather volatility is also going to lead to it's going to make it more difficult to have resilient value chains. And again, it's not clear to me what one can do for the next 50 years, because anything we do is not going to really it's not going to solve the problem in the next 50 years. Our hope is to save the planet, but for the next 50 years, I don't see this weather volatility as going away. So the question that I want to leave to the audience is, whether we have pushed this model as far as we can, it's not going to go away. But I wonder whether it would be wise for us to start to think about, let me just call it a backup plan or a different model. Instead of continuing to push as hard as we can on this current path, because it just seems that the cost of this current path and the obstacles that one has to go through, that it just seems quite formidable. So I'll stop there.
Thank you very much, Shangtai. I think you raised the political challenge and the adaptation challenge. So let me turn to Alicia. What can be done to strengthen the resilience of global value chains? There is a trade dimension, policies and regulation dimension. I mean, short of, so to speak, abandoning the model, what policies and regulatory measures would you suggest to strengthen resilience?
Well, I also want to thank the AIIB for this invitation. I hope you can hear me well. If that's the case, I will attempt to answer this very difficult question. Most of the answers are already in this wonderful report, which I want to comment is very, very comprehensive. But on resilience, there's never enough to be written about. It's just a very important topic. And beyond the usual suspects, we would all have mentioned before COVID, such as diversification or basically infrastructure. Yeah, these were the pillars of our resilience. I think now we're moving to more difficult territories to start, because we expect global value chains to remain resilient while we don't even have people-to-people movement. So unless we manage to have manless transportation, I think that's going to be in itself a very important constraint for value chains. But the key word for me at this juncture is really traceability, because that word in a way summarizes everything that we're trying to do to reduce the risk and increase the resilience of value chains. And that of course could have political implications, but it could actually only, if we avoid the political implications, it can actually have economic benefits. One could think of course the carbon footprint, which we can discuss later, but imagine all of the other risks that are unrelated but still important to be traced, such as, for example, financial fraud or cybersecurity, or even disclosure needs. Your point on regulation, if regulation pushes you to disclose, and we are seeing a lot on this front in Europe, I have to say, even at the EU level, and very much in line with the need for value chains to be kind of freed from whether it's forced labor or of course impact on climate, but all of that can't be done without traceability. So I would argue that on every front, this is the way forward. And this is why infrastructure in a different sense, and this is of course the digitalization of global value chains, becomes a cornerstone of this evolution that we need to go forward. So that would be my response.
Yeah, thank you very much, Aisha. I see your point there, and perhaps that links up well with another challenge from global value chains that I'd like to ask Chang Tai about. Perhaps you can come back on your more fundamental concerns in your intervention after this one. But if I could ask you to concentrate in this question on agglomeration effects, because the economic literature suggests that there are strong agglomerative forces for global value chains that benefit some locations and may exclude others, that some people associate with the rural-urban divide. Is that a worry for you, or is this risk overstated for the future? And how can we make global value chains more inclusive?
Inequality that we see.
We don't hear you well. Maybe, yeah.
I would say that it's not clear to me that it has much to do with global value chains. That it's all just coming from the fact that that modern economic activity has very strong agglomerative feature, and I guess my guess is that these agglomeration forces are going to be present with almost any other model of growth. So it's not clear to me that it has a whole lot to do with global value chains. If anything, I think that the global value chains potentially has the effect of basically spreading out economic activity across space rather than agglomerating economic activity across space, because you no longer need all parts of the production process together in one place. So I don't see it as so. Let me just say that I see the point that you mentioned as being a really important one. Like in most Western countries now, it almost looks like there are two countries. There's the urban part of the country, and there's the non-large urban areas part of the country, and it's creating huge social and political problems. But I do think that global value chains are probably part of the solution, rather than part of the problem.
Thank you. Thank you. Yeah, I think that's an optimistic. It's good to be optimistic. And let me turn to Amitabh again, because I know also you have to go in a few minutes. What infrastructure investments do we need to enhance the benefits and resilience of global value chains in the future? Are the infrastructure requirements changing because of the changes in our economic structures, reshoring, digitalization? What is your perspective?
Infrastructure has been the back on which countries have transformed themselves. The infrastructure plan of a country must seamlessly and efficiently move goods and people across various modes of transport. A precursor to integrating into GVCs is sound infrastructure and industrial policies. The quality and price at which power is supplied, the cost of logistics, the availability of digital infrastructure, and sector-specific policies are key determinants of GVC participation. To my mind, improving the share of railways in transport, reducing port turnaround times, overall promoting a seamless multimodal logistic network is crucial for India to build competitiveness. So much of the infrastructure investment has to address these factors. However, new challenges are also afoot. The infrastructure must be resilient and climate smart. The challenge is to build infrastructure that is fully digitally enabled and climate smart. In India, we've the opportunity to build much of the infrastructure that we require. The recently launched Gati Shakti program by the Prime Minister makes a paradigm shift to break the silos of departments and have a national framework. All existing and proposed economic zones have been mapped along with the multimodal connectivity infrastructure in a single platform. We have envisaged 1.3 trillion worth of investments in infrastructure under this program, spanning both physical and digital infrastructure. India's infrastructure plan will leverage technology, a GIS-based enterprise resource planning system with 200 plus layers for evidence-based decision making, and the use of satellite imagery for monitoring is another. The logistic infrastructure that we are developing is all based on advanced RFID tags at toll booths to reduce time lag in road transport. I also believe that digital technology is changing the way manufacturing works. The world is witnessing the unfolding of the fourth industrial revolution, and this will radically ensure that manufacturing technologies will use artificial intelligence, the Internet of Things, cloud computing, blockchain, and robotics. And therefore, building resilient digital infrastructure to complement the physical infrastructure will be key in firms achieving competitiveness in global markets. And that is really the key. How do you converge physical infrastructure with digital infrastructure? And therefore, while it's very, very important that we ensure regional integration within a large country like India to enhance our participation in global value chains, while India has increased global value chain exports over the past few years, they remain concentrated in a few industries and states. We now to connect the hinterland to the ports, which is the main challenge, and ensure that railways make substantial commitment in greening railways, and they have committed to being a net zero carbon emitter much before 2030. So railway electrification has been given a big thrust, and therefore my view is that all this will push for greater integration of India in the global value chain. Green hydrogen will be a very
great.
Thank you.
Thank you, Amitabh. I think that is a very impressive agenda that you portrayed for India, and that is on the path for prosperity with the various sectoral dimensions and governance dimensions. I think that is a very good rundown through your country's experience. Now, let me ask Alicia, if you kind of take a more global perspective, how, and maybe focusing on the green agenda, the decarbonization challenge, how ready and how effective are countries and companies along the global value chain to actually get to this point that we all want to reach in the coming decades of a globally integrated modern economy that is net zero?
Well, thanks. This is the $1 million question. But what we know, and this is the World Economic Forum's report on decarbonization of global value chains, it so happens that just this very issue that we're discussing here today happens to produce 50% of total emissions. According to that report, there are 8 sectors: construction, fashion, fast-moving consumer goods, electronics, automotive, professional services. I would never have thought of that one, and freight. So if you put all of that together, basically coming up with ideas to decarbonize global value chains has to be the topic of the future. I mean, and I think that's why this report is very welcome. Beyond that, I think there's many proposals in this World Economic Forum report, but frankly speaking, I think the fastest is what we read today on DFT. It's not a new proposal, but it was, to me, impressive that we had basically the business councils of the US, Europe, Australia, and Canada all claiming they want, I say claiming because, I'm sure it's very costly, a global pricing strategy. And as an economist, I believe in pricing mechanisms, and therefore I think we need to really push for that. I understand that we can't have a single price for everybody. That would be very unfair for the emerging world, but we need to find a way to accelerate decarbonization. And without prices, it's just going to be very, very slow, in my opinion. Or at least, if not slow, it's going to be probably distortionary, because there will be sectors which may have more of a burden as opposed to others having less of a burden, let alone, of course, carbon leakage. So on that front, I think we really need to work on this. This is what I would call the new Bretton Woods, if you ask me. I mean, this is where we all need to come together and come up with solutions for that convergence, whatever it may take, of pricing of carbon, which will eventually reduce those emissions that we'll want to reduce. So that would be my call on this one.
Thank you, Alicia. I hoped you would give this answer. I really like it. As a moderator, one shouldn't take positions, but I cannot help it. So, and I also see with great hope that this pricing will cover as many sectors as possible, and not for political economy and opportunistic reasons limit itself to what seems easy, and because then also I think things will become very expensive to change. But Changtai, if I may, please do make other comments as well, since it's the last question I have to you. But Eric mentioned the role of lead firms. And lead firms have had a positive impact of global value chains. Do you also see them making a positive contribution to attain net zero, if only perhaps through the fact that they are also able to master pricing challenges? And what government policies would you advise if you think that the lead firms do play a favorable role?
Like if you want to think about the precedent of this.
Could you speak a little louder, please? We have a bit difficulty to hear you.
I think the lead firms are absolutely crucial. I think that they have played a huge role in terms of propagating labor standards. They have played a huge role in terms of the transmission of technology. in terms of what governments can do, if I think about sort of what is the main thing that is driving lead firms to adopt green policies, I think it's primarily social pressure and not so much what governments are doing. Social, and it comes from a variety of ways. A big part of it comes from just the push by the employees of these companies and the kind of people that the companies want to attract. So I think that's the main thing. Since this is like let me just say, yeah. So I think that they absolutely are crucial, and I think that it's good for the report to highlight this. I want to go back to one of the points I made at the beginning, if I may, and I want to throw out sort of just a question about a specific case. Okay, one of the industries in which global value chains has played an incredibly important role is the global semiconductor industry. Now, what we've seen in the last 1 or 2 years is that there's now tremendous pressure to localize different parts of the global value chain. What we see is that the US wants desperately to have a US semiconductor industry. The Europeans want it as well. The Japanese want it as well. And also the Chinese have been pouring billions of dollars into the global value chain, despite the fact that it's funny that there's, because it is one of the sectors where the global value chain has not really been under stress. The stuff is all transported by planes. It's not transported by boat. There is a temporary problem, which is there is a temporary capacity problem, which is that demand is much greater. But in terms of the infrastructure challenges or all the things that we think potentially are driving problems with the global value chain right now, none of that applies to semiconductors. Yet there is a real fear everywhere in the world that at some point in the future, that tap is going to be shut off. That the two leading companies, which is the Taiwan Semiconductor and Samsung, they're going to not sell us the semiconductors that we need. So let me just put that question to the audience. In terms of responding to political leaders in Washington, political leaders in Tokyo, political leaders in Beijing, and political leaders in Brussels, what can we tell them to say that, no, this global value chain for semiconductors is incredibly resilient, that you will always get what you need from TSMC and Samsung, and there's no need to pour hundreds of billions of dollars in subsidies to create your own semiconductor industry. Let's rely on the global value chain. It's clear that that is not convincing. So then what can we do? I guess the question differently. What do we do if we really believe in global value chains? What do we do in response to this particular case?
I think, Chang-Tai, you raise a very important point. And I mean, just as we want the pricing mechanism to work with decarbonization, I think it is also important to let it work in this area to actually have the benefits of the global value chains continuing to create progress and supplies at best prices and not create huge distortions for some industrial or other political reasons. Before I turn to the audience, and maybe the audience picks up some of what we've discussed before, I do want to close with a question to Alicia, this part of our event. And if you don't mind to be a bit quick, otherwise we will not be able to turn to the audience. But what do you think MDBs should do to enhance what Eric displayed and presented in his report, that we have a positive development impact, continue to have a positive development impact of global value chains that also helps the net zero transition? What should we do?
couple of ideas very quickly. First, the traceability idea. I think it's so much better to have global standards for that than having everybody, sneaking its own traceability and therefore politicizing it. Yeah. So, and the second one, of course, is measures of carbon footprint. And for that, I think working first on the statistics of input-output data and trying to figure how to measure that at the global level would be an enormously important endeavor, and for which we need global institutions. And therefore, I think you are at the forefront of that endeavor, as I mentioned. Yeah. So these are the two. And I hope I've been brief to leave some for time for questions.
Great. Thank you very much, Alicia. And I'm just looking at the chat here to see one question that we have, or one set of questions that we have relates to the impact of global value chains on wages in developing economies. How can we ensure that global value chains do not kind of depress wages and actually kind of leave at least the poorest developing countries out of development, especially if you think about the role of lead firms that maybe are not so interested in these countries. Who of you, maybe Alicia or Changtai, who wants to pick this up?
I can have a quick answer. I mean, it's a very basic answer because we have an international organization looking at this, the ILO, and we just need to take it very seriously and come up with ideas to kind of integrate that agency into the discussion of global value chains more than we have so far. But in other words, perhaps avoid politicization of that agency to make it useful, because we need to have the sense of wages and productivity, link the two, and do that on an input-output, value-based framework. And I think that's the challenge. But the tools are there. We just need to use them.
Changtai, what's your take on this?
I think the evidence is it's sort of a funny question, because I think the evidence is just so overwhelmingly clear that basically whenever labor demand goes up, wages goes up. So I'm not sure what else to say. That basically, and also just a basic empirical fact that every single country that has joined the global value chain, these are countries in which wages have, wages on aggregate have gone up. Wages could still be low, but there's no question. So I'm not quite sure what else to say about this. That it just seems like such a basic fact about the world.
Yeah, well, I think that's a straightforward answer, and a good answer in the sense of an optimistic answer. If what we've seen the past decades is likely to continue, but it's true. I mean, it's not going to be true for everyone everywhere, which is of course part of our challenge, what to do, and that reminds me of my previous life, where I was responsible for education and skills at the OECD, where we always said, if to reap all these benefits, reskilling, upskilling, that's going to be a major challenge in this context for all our economies, especially the advanced ones. Now, I have one other important question, and I'm wondering whether I should draw back Eric into the discussion, because it's about MDBs and the role of MDBs for global infrastructure, cross-border infrastructure, that is important, especially for global value chains and for drawing in the poorer countries, where individual countries perhaps do not have the means to fund them. Eric, what's your take?
Well, I mean, this is an easy question to answer, I think, in the abstract. This is definitely what we were set up to do, and it's part of the corporate strategy objectives of AIIB to really focus on promoting connectivity across countries within Asia. We know that this is a tremendous challenge still for this continent, and there's a lot more to do, and obviously tying this to global value chains is, they go very much hand in hand, and you can see the benefits of global value chains in promoting this connectivity, and that's and again, if we MDBs can be part of creating the conditions for global value chains to operate across countries, that's a very important role for us. So yes, that is very much part of our mandate, and of course we should think this beyond just physical infrastructure. I think we should also think about how we can use digital infrastructure. I'm thinking of one example that it's not about cross country, but it's a very interesting example, a recent investment we made in Indonesia in satellite, using satellites to provide broadband across the many thousands of islands in Indonesia, and you can see how this can be used more broadly across countries, and there are so many opportunities that we need to be part of promoting.
Yeah, I agree. And I mean, Alicia mentioned the importance of global standards and the kind of global institutional infrastructure that is needed to overcome kind of national differences in institutional setups, in capacities, and so on. So, I mean, there's multiple dimensions to that. And I would say with this, perhaps I'm looking, no, there's no further questions. And I think we've also reached the end of our allocated time. And I know, Eric, I gave you a simple question, which is in reality actually quite difficult, but I saw you had a really busy day today. You've done gender and green transition, and now the launch of this report. So you deserve kind of the Sakharov Prize of the multilateral development banks in here. And so I thank you for presenting your report. And of course, I thank Alicia for joining us, and I thank Changtai and Amitabh, who's gone by now, for sharing your thoughts in this session. And if this has whet a bit your appetite for the Asian Infrastructure Finance report that Eric presented, take a look at it. Take a look at our website for future events. And for now, goodbye and thank you very much.